Hello everyone. So this morning I get to compete with Roger and the Crystal Circle. So my aim is to add more value to you than the Crystal Circle guys are getting next door. I have worked with Roger for 6 years, so I might try to use some of his stuff. No, so guys, listen, we're going to have a bit of fun. We've got an hour, and then there's a lunch break, and then there's another session at 1 o'clock. I do need to be in Sanson by 1 o'clock, so we can't go over too much. But the good news is we don't have a hard deadline, so I'd really ask if we can engage. Is that fair? Does anyone know what a workshop is? What's a workshop? So a great statement I was given once is that you come here thinking that I'm going to work and you're going to shop. But actually really it's where you engage your brain. So let's start off. Who is Robert Wayne? Ronald Wayne, sorry, Ronald Wayne. I told you, you thought you were coming here Monday morning just to listen. So come on. Anyone? I'll give you a little surprise. There's a little logo in the top corner. He was the third shareholder in Apple. He actually sold his shares for $2,300. They're 10% of Apple, that today is now worth $70 billion. Now what's the moral of the story? Well, sometimes in life, you're going to learn stuff. But if you knew today what you could have known back then, it might be quite valuable. Would you agree? Yes. Also, you can look at the other side of the story and say, there's plenty of entrepreneurs in the world that probably are better off with their $2,300 because the business went bankrupt. Is that fair? So having the right information at the right time is the key. So let's look at this. You've got Delta Airlines. And I don't know if people know this, but it's the oldest airline in the world. It's been going since 1924. It's got 80,000 employees. It's in about 334 cities, 66 countries. And what's interesting is its valuation is 17.9 billion, of which 10 billion is aeroplanes. You compare that with Uber. It's got 11,000 employees. It's been going since 2009. Its valuation is, well, this is an argument, but anywhere from 50 to 68 billion. And what's fascinating is that it is in 74 countries and 768 cities. Marriott Hotels, the oldest hotel group in the world, the biggest hotel group in the world. It has 697,000 beds. It's got in the region of, again, about 80,000 employees. And its valuation sits in and around 26 to $29 billion. What's fascinating, you compare that with Airbnb. Does anyone know how many employees Airbnb has? 5. A little more than 5. So it's actually interesting. When you look on Wikipedia, it says 1,400. I have found upwards of 6,000, so it's somewhere between the two. But what's really interesting with this company is that they have 3 million bed nights. So Marriott, 679,000, 3 billion. Its valuation is $31 billion. So what is happening? Why are these tech companies, why are these values being created? I mean, let's just look at this quickly. And I just want to share with you a little live diagrams. Look at what's happened since 2014. So since I was in Bali with Roger, look what's happened over the last 3 years in terms of tech valuations, tech companies. So now, when we look at it, this is a great slide, and I know Roger's got a similar one, where, you know, you've got Uber, the biggest transport company that owns no cars, Facebook, the biggest media company that does no content, Alibaba, the biggest retail company that owns no, inventory, Airbnb, etc. What is happening, guys? What is there? This is a really important lesson to learn. So the first thing is, what do they all have in common? Platform, fair enough, you're right. What type of company are they? They're a hard tech company, but it's deeper than that.
Share. Crowd-driven.
Crowd-driven, share, they're all right, but there's one word I'm looking for.
Risk.
Risk, exponential, data. They're data companies. The value is in the data that they have built. Is that fair? So the first lesson, hopefully for all of you, is that all of us, if we want to create value and make money, it's about data. The second thing that's interesting is that when you look at these different industries, if you're starting to look for parallels and you're sitting and you're thinking in your industry or in your area of expertise or your passion, there's only two things that define whether there's going to be a tearaway success like these companies and redefine an industry. Literally two things. The first one is that the experience, the user experience, the customer experience is a really horrible experience. Like catching a taxi, was it a fun experience? Anywhere in the world. You know, literally in South Africa, you would phone the taxi organization, they would phone the driver would phone, you know, blah, blah, blah. 2 hours later, you're lucky if the car picked you up. I mean, even I used to use Goodfellas. Anyone still use Goodfellas? You know, the point is that took 2 hours. And then the one time they were on time, my friends didn't want to leave at that time, you know, etc. It just wasn't a pleasant experience. Uber turns up, and we've got real-time transport. The second thing is cost, where there's a bunch of middlemen, and it's very inefficient and very costly. So again, think of the taxi industry. Can we agree it was very inefficient and very costly? Like you see how something like Uber has changed that. Now look at all those other companies, and you literally look for those two things, and you will find the same opportunity. So you look at Maya with Cash Cloud, okay, in banking. Who likes their banking experience? Seriously, who here loves their bank? Okay? And secondly, you know, is it easy and are there like low costs? There's not. But you see why banking is going to be disrupted, I guarantee. You see, it actually starts to get pretty easy. So let's go to the next level. And for me, what about this industry? A $13 trillion industry. How many of you like buying houses, renting houses, investing in commercial property, dealing with management agents, broken toilets, tenants that don't pay, governments that back tenants and not you? It's fun, isn't it? And obviously it's really, really quick. And how long does it take to buy and sell a house in this country? 3 months, 6 months, depends if it's Christmas or strike time. And then there's, you know, very low costs, aren't there? We don't pay estate agents and lawyers a lot of money to do this transaction. You see how logical this becomes? So I'm not saying it's going to get disrupted. Like, I guarantee you it's going to get disrupted, whether it's us or someone else. Same with, you know, Cash Cloud. It's guaranteed going to happen because the customers are frustrated and they want a better solution. The other thing that's interesting is that when you look at it, there's really two major things that are happening. We've got a technological disruption, but we've also got a cultural disruption. And what I mean by that is that on the one side, technology is enabling things to happen, but on the other side, people culturally want to take control of their financial destiny. I mean, I really applaud each and every one of you, because whether you've got your own company or whether you work for someone else, it's still Monday morning and you're in this room. Like, there's probably some place that you should be if you had, you know, it's Monday morning, basically. Am I right or wrong? That's what I mean by the cultural disruption. People want to take control of their own destiny. They no longer want to trust their government or their financial planner, no disrespect to financial planners. But the point is they want to take control of their lives. Is that fair enough? And this is what's really happening. And then the next thing is that people want globalization. So in South Africa, when I stand here and I say to you guys, look, would you like to invest overseas? Who in the room would like to invest overseas? Who thinks it's a bad idea? Who thinks they've got no idea? So what's interesting is that if you're in America, not one American thinks you should invest out of America. In fact, I've had Americans tell me that why would you invest outside America? Whenever we, you know, catch a cold, the rest of the world gets flu. Like, they're very arrogant about how wonderful America is. So in the emerging world, it's actually really easy to explain to people why you need diversification. I'm from Zimbabwe originally, half my family's from Zim. I still have 3 farms in Zim. No one needed to teach me about diversification. But yet, you know, when you're in the first world, you know, people haven't necessarily thought it yet. But what's interesting is you take Brexit into account, you take Trump into account, you take North Korea into account, you take hurricanes into account, and it doesn't become very wise to have all your eggs in one basket. You know, Dr. Dolph de Roos, who is the president of Wealth Migrate, had 8 commercial buildings in Christchurch, free, paid for cash, and then the earthquake happened, and he's lost all the income. And what's interesting is the insurers, he was fully insured, but they won't pay because they say it's an act of God. Diversification. In 1 square mile, he had 8 commercial buildings. Now, you know, that's a very clever thing to do, supposedly, until you have one earthquake. So I want to share with you a little video here. Can we just put the sound on, please? And this is really a vision into our future. This is not all built, but hopefully you'll get a view as to how we see the world changing and how we can solve one of the greatest challenges on the planet.
We'd like to introduce you to a revolution unlike any other throughout the history of mankind. This is a wealth revolution, and it's going global. Did you ever think that you'd be able to benefit from the only real, time-honored investment mankind has ever known? Real estate. Real estate investing has only ever been accessible to a small percentage of the world's population. This is no longer the case. The wealth revolution means that wherever you are on your wealth journey, be it taking your first steps or taking off globally, you can join our global community. A community of real estate investors just like you. The Global Wealth Group is experiencing exponential growth, and wealth has never been this accessible. A truly global wealth revolution. We dream big, and our dream is to impact the lives of 1 billion people. 1 billion people. How will we do this? Through groundbreaking digital platforms that allow investors like you to take part in exciting real estate investment opportunities. These opportunities are waiting for you everywhere, anywhere, worldwide. Now you can invest in real estate with any amount of money, from the comfort of your couch or your internet device. Introducing our global brand ecosystem. Wealth Create, Wealth Migrate, Wealth University, the Wealth Movement, and the WealthE Coin, which unlocks the entire ecosystem. WealthCreate.com is a platform for those taking their first steps on the wealth journey. The new investors who earn whilst they learn using real or virtual currency. Imagine this. Now anyone can own part of a hospital, a share in their local shopping mall, co-invest in a new and exciting development, or even earn quarterly returns from residential and commercial tenants. They, you, can now stand alongside multi-millionaire investors and earn the same relative amounts. WealthMigrate.com is a platform for those investors who are already soaring, as well as those who seek to join them. You can now own and manage a global portfolio of commercial real estate and do it all online. You'll benefit from the capital growth of your investments and get paid quarterly dividends in first world currencies, whether they be from commercial tenants or the funding of developments. The global dashboard shows all available opportunities, potential investment pledges, upcoming deals, and most importantly, allows you to manage your global diversified portfolio in one place. Passports and visas also become easier to obtain, as well as tax-efficient structures that allow global flexibility. Create the freedom you desire for you and your family. WealthUniversity.org is a video-based e-learning platform for those who want their wealth knowledge to take off. Our research shows that the wealth mindset is the single most important aspect of creating and sustaining wealth. Test your wealth IQ and challenge friends and family to find out theirs. Acquire the thinking, secrets, habits, and proven success strategies used by the world's wealthiest investors, as well as that of our global community, who aren't just talking about it, but are actually creating it. Graduate and change your destiny and your future. WealthMovement.com is the global gathering of our fans and followers in conferences hosted in local cities around the world, inspiring minds to help each other create more sustainable global wealth. The goal, to build a wealthier world together, and together to help reduce the wealth gap between the haves and the have-nots. Gain the latest up-to-the-minute knowledge of technology forecasts, internet finance, exponential thinking, collaborative smart investing, co-creation, apps and platforms, global wealth forecasts, cryptocurrencies, and new and exciting investment opportunities. This is your chance to meet your global wealth partners, co-investors and friends, to be inspired by the world's wealthiest individuals and to learn to think how they do. WealthE.io is our cryptocurrency, which is based on real estate. It unlocks the entire ecosystem, whether it be the community working together on due diligence, education, investments, social networking, community engagement, purpose, or many other applications within the global wealth group ecosystem. Let's build a wealthier world together. The WealthE Coin is the catalyst to ensure this happens. At the Global Wealth Group, we are pioneering a global wealth revolution. Join us. Let's change the world.
I want to give some credit here. I really think that it's a real honor and privilege to be part of the whole team here, because that vision became a reality in Bali. It was a reality for many years, if not even decades, in my head, but they actually helped me turn it into Roger and Sandra and the team, into being able to put it on paper, which enabled digital people to be able to make it real. Does that make sense? So I was never able to explain in 5 minutes what we were going to build in the next 20 years before I did that 3 years ago. So let's go back a couple of steps as to where it all started. So there's my father, and unfortunately there's Debbie and Glenn are in the room, and actually went to university with my dad. But unfortunately for my father, you know, he went to school, he went to university, he became a chartered accountant, which, as you know, in this country is right up there with a doctor and God. Investing, you know, gives you an account straight out of university. He became financial director of Rainbow Chickens. He tried to go on his own when he was 49 years old, and unfortunately he retired, well, he actually passed away bankrupt at 59. Now, you know, I was in London at the time and I flew home, and the day I got home I actually found a bank statement, you know, similar to one of these bank statements, where he had tried to draw, you know, 50 Rand. So that much money he had tried to draw, and Standard Bank had declined. Now that's not the way it's supposed to end for someone whose story I just told you, because that's the story we all told as the success strategy, is it not? I decided at a very young age that I had to do it differently. So this is actually me and my dad on my very first construction project. I didn't want to share with my brother anymore, and so I persuaded my parents at the age of 13 that we should knock through the toilet and put on a double bedroom, ensuite bathroom. And the one thing I will say about my parents is they gave me incredible self-belief, because I believe that is my very first project, but I guarantee you there was a quantity surveyor and you know, architect, etc. That was my first real estate project at 13. Secondly, as a young boy, I've always liked playing Monopoly. You know, who in the room likes Monopoly? You know, who wishes that we could make Monopoly a reality? Literally, like turn in real life, like not just little. So, you know, we kind of thought, well, why can't we do that? And then thirdly, you know, it's very surreal to be standing in Joburg saying this, because I try and show this all over the world, but we live in a country where the wealth gap is just getting worse and worse. And if we don't solve it, like I guarantee you, we will not have a sustainable future for our children and their children. And so what's interesting is that, you know, if Malema has his way, it's about taking away from the 1%. And so what the 1% tries to do is build a bigger wall, like Trump is doing. So what we actually have to do is empower the 99%. It's the only way to do it, to sustainably do it. So as a young man, this was really what was driving us, those three things. And then, you know, we sat back and we looked at the actual facts. I'm not sure if you know this, but 49% of the world's wealth is held in real estate. And just for those in the room, if I use real estate or property, it's the same thing. I know in South Africa it's property, but forgive me, in the last 3 weeks I've been in Switzerland, Brisbane, and now Joburg, so I have to change my life. So anyway, so it's interesting, 49% of the world's wealth is held in real estate, and yet only 12.9% of the world's population has access to real estate. So again, if you're in America, they don't understand what I'm talking about, but in South Africa, do you know what I'm talking about? What's fascinating is that also, Now this includes all of you in this room, because you all have access to real estate. But of that 12.9%, statistically in England, Australia, and America, less than 1% of you and I are going to retire wealthy at 65. So we're all going to work our butts off, we're going to pay our taxes, and statistically 99% of us are going to fail. That's pretty hectic, you've got to admit. So the question is, well, what's different? And I think there's a beautiful story to sum it up. And just before I go there, you know, we looked at it and we said, well, clearly there's something happening. I mean, the Credit Suisse report came out recently. And in the first 8 years of the 21st century, the wealth gap was actually closing. But since the GFC, the crash in 2008, 2009, it's now about 10 times worse than it was. Can anyone tell me why? There's one reason why. Education? Yep. There's one fundamental reason when it comes to wealth. Assets grow faster than income growth. So salaries go up slower than assets appreciate. That's it, full stop. And wealthy people invest in better assets. The 1% invest in better assets than the 99%. It's literally that simple. So, you know, when you look at it, Peter Diamante says the world's biggest problems are the world's biggest opportunities. And we sat back and we said, well, this is not only something we're passionate and purposeful about, but we also believe we can find the solution. Because we believe that we should help the 99% be able to invest like the top 1%. Now, I'm not going to repeat the story because I think you were all in the room on Saturday when I explained with Roger. But in 2009, when I met Henry Note and he was buying medical hospitals, was anyone not in the room on Saturday? Just an interest. Just a few people. No, not in the room. Yeah. Because I don't need to repeat the story. But in simple terms, guys, they were buying medical buildings and I and my clients were buying houses. Here's the difference. Medical buildings are far superior than houses when it comes to investing. Now let me explain to you why. Wealthy people invest in products that give you passive income. Middle class and lower class people invest in things for capital appreciation. So anyone in this room that's bought a South African house, particularly if you bought it off a developer, is it cash flow positive? If you're honest with yourself. After rates and taxes and everything, is it cash flow positive? So why have you bought it? And to live, your house, that's slightly different. That's not an investment property. I'm talking purely investment. So to live is a separate conversation. Your house is not an asset at all. So do you see where I'm going? I'm sorry, I'm being very direct here. We're all buying houses for capital appreciation. And yet wealthy people are buying commercial property not for capital appreciation, they're buying it for passive income. And remember what I said, doctors never go out of business, they stay in premises for a very long time, and they sign very good long-term favorable leases. So do you know our partners in America during 2008, 2009, the property market, the residential property market in America lost between 40% and 70% depending on what city you were in. That was the residential market. Do you know how many tenants my partners in America lost in the medical commercial space? Not one. Now that's interesting, don't you think? Because what's interesting there is that their income didn't change at all. The capital growth might have gone down, technically, but their income didn't change. So what were wealthy people doing in 2009 and 2010 while everyone else was trying to survive? They were buying. And who were they buying from? They were buying from middle class people that were chasing capital growth. They're starting to notice. This stuff is not difficult when you start to understand it. So we wanted to provide technology to allow people to invest like the top 1%. We want to make investing as simple as a swipe of a finger, and we want to make it from as little as $1. Now again, all over the world they get asked, well, $1 is not going to change people's lives. And I say, yep, it won't. But it'll change their habits. And I promise you, change your habits, you'll change your financial destiny. So again, I said this on Saturday. I'm interested in helping every single one of you. But really what gets me out of bed is when we can get it down to $1 and we're helping the people that are serving us the food at lunch. Because when we do that, we can fundamentally make a material difference on this planet. The current system's broken. You know, you and I are over there as the investor, that's the investment. Can anyone tell me how many middlemen there are in an average property transaction? 16 middlemen between, I'm being very kind though, I've only got 3 or 4. There's fees all the way through the process, there's no trust, there's no transparency. Because of the high fees, there's very little returns and ultimately no alignment. We decided to change that. We decided to say, well, why can investors, you and I, not just get access to the best opportunities around the world? And why can the best property partners not get access directly to global investors? We decided to ask ourselves a question: how do we make global real estate investing easy? I mean, let's think about it. If you invest in local property, most of you think management, maintenance, broken toilets, emails, you know, rates and taxes, drama, hassle. And that's just if it's local investment. Who in the room owns an offshore property? One person, 2 people, 2 people. So those of you that own offshore property and those that you haven't bought an offshore property, the reasons are probably because it comes into tax, structuring, compliance, bank accounts. What country do I even start in? Would you agree with me? So we decided to, through the platform, allow people to invest. So I'm just going to stop this thing jumping up and down. We decided to help people invest literally in a couple of minutes. Oh, which one's buttons? We decided, you know, people in a couple of minutes to be able to get access to the best partners and the best opportunities from as little as $1,000 and ultimately just focus on the best returns. And what's interesting is that we beta testing in South Africa 1,000 Rand, which is $100. So my dream is to get it to $100, and we will do that, I promise you, in the next 3 months, worldwide. We're quite a long way off $1. We need companies like CashCloud to come to the table, because the current banking systems and stuff, at $1, it just doesn't make logical sense. Does that make sense? So let me show you quickly. Roger actually shared the screen on Saturday, but what I think is more important is that he showed you the website, but what I want to do is go into the back end, because anyone can do a nice presentation. So what I'm actually logging in, I'm logging in live now to my platform, my portfolio. So Kelly, my wife and I's portfolio. And so now you're getting in basically to my global dashboard. So you can see we've invested across 4 different continents. We can go into my funded investments. So I can go into any one of my properties. Let's just take this medical building in America. I can go in, I can get all the project updates. I can go get all the returns. So I actually just pulled this up earlier so that you got it in case things wasn't fast enough. But you can get all the different reports. One thing when it comes to the financials, if anyone's ever tried to read the financials of a listed fund, it's like 36 pages long, and they like to hide all the fees. Like, you need to be more than an MBA to know what's going on. We like to go 10 Rand income, 2 Rand expenses, 8 Rand return. You see my point? Like, just so people can actually understand what is happening. The full breakdown of who the tenants are, how it's working, so that people just really know what's going on. So you've got access to all the information. If I go back, if I want to open, who here has opened a bank account overseas? It was easy? When you were living there, fair enough. I'm talking when you're living in South Africa trying to open a bank account overseas. Anyone try it? Is it easy? Okay, so let's just go here. Let's fund my wallet now. So I can fund my wallet through Sable ETF, which is basically, Sable's one of the companies we work with in this country that can do move money much cheaper than the banks. Paygate, you can use your credit card, and or Bitcoin. So if you think that Bitcoin is at too high a level now, you can invest in the properties using Bitcoin. Now, what's interesting is you can fund your wallet in pounds, dollars, Aussie dollars, or rands. You'll see I don't have much money in my wallet because it's a Barclays bank account, and it earns virtually no interest. So whenever I get a return, I put it straight back into properties. This here is Roger and the team's resort. So with their permission, we're actually beta testing a buy-sell option. So this is what's called the secondary market. So the number one problem with direct property, can anyone tell me? Liquidity. Like if you buy it and you suddenly need money, you can't sell it. So what we're doing with the buy-sell option is that people will be able to get all the benefits of direct property, but should they need the fees for the money for whatever, there's going to be a buy-sell. Now please understand, this is beta testing at the moment. It's not guaranteed buy-sell. Like, it's still simple, willing buyer, willing seller. So please, when I'm standing on the stage, hear me very clearly. Think like a property investor. Like, think medium to long term. Please don't get in December and expect to sell in January. I'm serious. Like, I want to be very clear. Like, just in case I'm being misunderstood. Is that fair? Then it comes down to, we spoke about it on Saturday. So the number one reason people don't invest is they say, well, how can I trust you? Like, if I give you $1,000 or $10,000, in this case, my wife and I invested $50,000, how do I know that if I give you the money, it's actually going to go and buy the assets, whether it's in South Africa or overseas? Can you agree with that? Yes? So there's two ways we did that. One is what we call the old school way, which is we've got a listed, regulated exchange. So the Seychelles is one of the top 15 exchanges in the world. We plugged and digitally integrated in with the Seychelles. So you can actually go and use this tracking number here, and you can go to Bloomberg, and you can literally see that you're listed, like, it's called a listed security, you own it. Like, you can see it exists right now without any third party. Personally, I think that's very old school. And what I'm much more interested in is blockchain. So you can see here what you've invested, you can see the fees you paid, the taxes, etc. Then you go into blockchain. Again, I'm doing it live for you. This is pretty geeky, but this is the sort of thing that only Siraj gets excited about. But this, no one ever cares in Uber how the back end of Uber works, but we actually did this on purpose so that people can see this. So you're actually witnessing, probably a lot of you in the room, blockchain real life for the first time. So this here is called a hashtag. The most important number here, can you read down the bottom there, is 58,326. So that number there, 58,326, that's confirmations. What's really important is that if I want to walk into the deeds office, so you know if I go on, what have we got in this country? Private property, Prop 24, Lightstone. I can go on and see that my house is registered in my name. Would you agree with me? It takes about 3 months if I'm lucky from even when transfer happens. But what's interesting is I can go into Block Cipher, which is one of the backbones of Bitcoin, and I can now, we're walking into the digital deeds office, and we're actually going in, and you see there, 6+ confirmations. That basically is confirming I own that asset. Now, let's go back to real estate in South Africa. How long does it take to buy or sell a house in South Africa? You know how long it takes in blockchain? 7 minutes. 7 minutes. So this lady in front of you and I have never met each other. There's no ways that you would sell me your house and me give you the money without third-party people, because we don't know each other, we don't trust each other. Through blockchain, it verifies that you own the house to sell to me, verifies I've got the money, it does a simultaneous transfer, and it registers it in the digital deeds office within 7 minutes. You see how the world's about to change. So guys, this gets really exciting, because now you, as the investor, can go online, and I'm not going to spend any more time on it, and actually see that you own the asset. But you see how this starts to change things? It's all about trust. Roger talks about social commerce, and how blockchain is the foundation of the social commerce. That is why. So, there's 4 steps. You know, you can sign up in a compliant way, any country you're in. We're not a financial planner. I want to be very clear here. We do not give financial advice, but you get access to the best opportunities, and you make a decision for yourself. You do the entire transaction online, and then the part I like best is I can manage my whole portfolio in one place. I don't have to deal with management agents and emails and everything else. So whether you want to invest in England, America, Australia, or South Africa, you no longer have to choose. You know what's interesting, whether you want to invest, so that's my first house I bought in London. I was 24 years old. You can see there the dates, 2002. It was a little flat there in Wimbledon. We still own it to this day. Or if you want to invest in commercial property, you no longer have to choose. So what's interesting is that everything I've shown you today is fairly self-explanatory. The technology is going to change the property industry. Can you agree? There's hundreds of platforms all over the world. In fact, we're aware of over 250. But all these ones in America, not one of you in this room can invest unless you've got a social security number. You know, there's Property Partner in the UK, you can actually invest with them. There's Do Rise in Dubai, there's Co-Assets. What's interesting to me is that when I caught Uber from this morning here, I don't want to have to use a different app in every country I go to. And even more so when I have my investment portfolio, why would I want different investments on different platforms all over the world? Like, that's not too dissimilar to owning different houses with a bunch of management agents. And what do we all want? We want a simple, easy, hassle-free life, don't we? So we decided to go out there and build a platform where people could have global diversity in one place. And what's interesting is that there's been quite a lot of interest in it. We've got now members from 107 countries. We've got investors from 46 countries. So that means people that have physically taken their money out of their pocket and actually invested. We've won a whole lot of awards. In this country, winning the KPMG award is not such a big thing, but anyway. But what's interesting is we had $66 million go through the platform now. But the thing I'm proudest of is that we've got a reinvestment rate of 70%. So when people invest, there's a 70% or higher probability of them reinvesting. And I feel that that means we must be doing something right. Because when people dip their toe, they want to know that it's working, and then they want to participate again. This is our back-end system. So, you know, really what Roger helped me do is, who here would like to write a book? Yeah, write a book. Seriously, the lady that I spoke to yesterday by 2027 was going to have written the book. So what Roger helped me do was write a book. And because everyone kept asking me to write a book, I will say I've run 3 comrades. I know you wouldn't believe that, but I will run 3 comrades back to back again before I write another book, because it's really not a fun experience. But the interesting thing with the book is that 80% of South Africans that invest overseas lose money, and I was absolutely frustrated by it. So we basically built a system, a 4-layered algorithmic system with Clem Santa. And Clem Santa said, listen, you need to share this with the world. So because he was going to endorse it, he kind of forced me to do it in 2014. And my point being is that I wrote the book, and it came out in 2014, and the only person who read the book was my mother. I'm joking a little, but the point being is that very few of you actually want to go and read this whole book. Think of it like a manual to catch Uber. You actually just want to use Uber. Does that make sense? So I could bore you with all the back-end systems of how we look at currency, the different countries, the financial structures, how we choose the partners, the cities, how we do the due diligence. Or I could actually just honestly tell you that we've built algorithms and we're using more and more big data and AI, like Suraj was showing you, to help people know where to invest, when to invest, what to invest in, who to invest, and how to invest. In simple terms, that's what we call smart investing. Can we turn the volume up, because I want to make sure people listen to this. We built this all on the blockchain. And Roger spoke, I don't know what wave it was yesterday or the day before, but blockchain. Do you know that the blockchain is going to have a bigger impact on your life than the internet itself? Let me repeat myself. The blockchain is going to have a bigger impact on your life than the internet has over the last 20 years. Let me show you a 2-minute video which I believe explains the blockchain the best I've ever found.
This is the seller. This is the buyer. This is the middleman. Cutting out the middleman can be a great thing, unless you're the middleman. And there are a lot of middlemen or intermediaries out there. Entire industries, such as payments or securities clearing, have evolved to rely on them. Why? Because they establish trust where there is none. They establish ownership, that the seller has the right to sell what's being sold. They attest to history, that there is a clean transaction history. And they certify ability, that the buyer has the money to buy it. All pretty critical details when you don't know the person on the other side of the transaction. Intermediaries know and trust one another. Their business is based on it, so they have more to lose than gain from breaching that trust. But what if there were a better, cheaper middleman, one that didn't add as much cost, complexity, and chance for error? There might be. It's called blockchain, and it has the potential to disrupt the entire ecology of intermediaries. It's a distributed ledger that relies on large networks of computers that redundantly encode transaction data by solving complex mathematical equations. The secure ledger provides an inviolable record. If the history of an instrument is incorruptible and available to all parties, there's no need for a third party to vouch. Blockchain is proof of ownership, history, and ability in non-centralized encrypted form. It's fast, transparent, and free of error. The question is not whether blockchains can cut out the middlemen in complex transactions, but rather which middlemen and when.
Anyone sitting there as a middleman a little bit worried right now? I was that person. I built RPS from 2004, and the more I learned about technology, the more I realized it was only a matter of time until we were gone. And so like I joked on Saturday, we decided to Uber ourselves before we got Kodak. So it's not too late, but it will be in 5 years, I guarantee. The next thing that we did was, it was really important to go out there and get some of the best in the world. So, on the board side, most of you in the room will know private property. Justin Clark started private property in 1997. He's built marketplaces in 18 different countries. Juan Freeman also is out of Joburg. Joyce Koppler is one of the top 10 ladies in America in the fintech space. Paul Niederer, that guy down the bottom left corner, he actually started the oldest equity crowdfunding platform in the world, or ran the oldest equity crowdfunding, and he's actually known around the world as Mr. Compliance, which is I answered on Saturday when the guy asked about the FSB. Dr. Dolph DeRoos, most of you will know his book, Real Estate Riches. Henny Beseda and Peter Fenstra are the two very wealthy men that I met back in 2009 on the medical deals. And then for those of you interested in Bitcoin and blockchain and what's happening, David Orban was the very first person in the world to own Ether. So I know what I just said doesn't mean anything to half of you, most of you. But Richard Titus is a Bitcoin whale, and Michael Turpin has done over 64 ICOs, including Ethereum, and they're all helping us with our coin. In terms of, so our whole philosophy has always been go out there and get the best in the world. Roger has been an advisor to us for years and years to the board. Now I want to look at just some of the deals. So again, everyone can talk hypothetically, but let's look at real results. So this is a medical deal that we bought. It's a portfolio of 7 buildings. We bought it in Atlanta in 2014. It's a $16 million deal. You can see the total deal size price in the top right corner there. The total equity we had to raise was just short of $6 million. The projected return was 8.3%. Sounds very much like my voice. And then you've got the internal rate of return. I don't have time today to go into all the details of the returns. There is a presentation I did with Robin Banks literally last week, which was a 3-hour workshop on real estate, including the value chain of real estate and everything. I'll upload that onto YouTube, so just go to my YouTube channel and you can watch it. I don't have time to go into the details, that's fair. But what I want to show you is that the returns on this portfolio over 3 years have been 10% cash on cash in US dollars. This one is 11.22%, this one is 8.49%, this one is 8.29%. Like I said to you, people can all invest through Bitcoin. Now what's interesting to me is can anyone in the room tell me in America what the average American REIT is paying? So a REIT is a real estate investment trust, call it a property fund. Can anyone tell me the average return? 6%? 3%? 4%? 3 to 4%. So the number I've got, they're saying 3 to 4, the number I've got is 4.75. It doesn't matter. Can we see it's all in the same genre? How can we pay between 8 to 11%? Are we cleverer? Is UCT a better university than Harvard? None. None of the above. It's literally down to one thing only. What is it? Fees. Middlemen. It's literally that simple. We had a client literally on Friday afternoon, actually it was Martin Freeman, who's been investing with us for 3 years. And he said up until he met us, he was told by Investec and everyone else that to get a return in a first world country, if it was more than 4 or 5%, it was dodgy. Seriously, that's what he was told. So this, I really wanted to just highlight for you why this is so important. And then the next thing that gets exciting is like, did you ever think that you would be able to invest in commercial buildings like this? So this is a big medical commercial in Atlanta. You can invest for $1,000. This is another medical commercial that we're buying in Atlanta as well. This company, by the way, is Richmond Honan. They've been in business for 42 years. They've had an average occupancy of 96% over 42 years. They've got $3 billion on assets on balance sheet. Why do you think they want to partner with us? Anyone? Do you think that we're just getting the crap no one else wants? There's 3 reasons they're investing with us. The first one is that this very establishment we're standing in 10 years ago, if it wasn't on TripAdvisor, it didn't matter. Today, it's not on TripAdvisor, it's not in business. Do we agree? So the first thing is, the forward-thinking property people are realizing it's time to go digital. Secondly, they realize that their caption pool has literally been Atlanta and the big property, Wall Street money. Why can't they allow all the investors globally to participate? And thirdly, and probably the one I'm most deeply passionate about, is they love our purpose statement to empower 1 billion people. And they're like, why can't we help make that happen? This is England, London, where it's, so again, most of you in this room probably might have been to a presentation with one of the local estate agents here, where they bring a developer out, they put a show on in a hotel room, and they sell you a flat. And why do you buy that flat? Capital appreciation? Yes, you do. Let's be frank. So what you need to do is go up the value chain and invest with the developer. So here we're not buying the flat, we're buying the whole building. And then this is in Australia. It's actually industrial warehousing, but cold storage. So no matter what happens with 3D printing and no matter what happens with technology, people are still going to need cold food quite close to where they live. Does that make sense? So we're always trying to think of stuff that's future-proof long-term. And then even in South Africa, you know, my business partner, Henry Saidnout, here in Centurion, bought his first medical building in 1992. Last year, he built 14 hospitals here in South Africa, and he's now letting us participate in his medical buildings here in South Africa. So you don't have to choose anymore in terms of what country. Which markets do we focus on? So for the entrepreneurs in this room, I would highly recommend you look at this. Roger Hamilton spoke yesterday about how Africa is the opportunity of Africa. I completely agree with it, and I believe the opportunity is not only Africa, but the emerging world. If you look at China, there's between 200 to 400 million people in China that are in the middle class, right now. Now, are you aware of the impact that the Chinese middle class has had on the global economy in the last 20 years? Has it been small or big? Okay? Huge. So if you take just these regions, over the next 10 years, there's going to be 1.2 billion people joining the middle class. And there's three things we look for. We look for countries with big population, we look for urbanization, and we look for internet adoption. Because that stimulates the rise of the middle class. So 400 million in China versus 1.2 million in the emerging world. Can you see why this starts to get exciting? 300 million Americans, they're not that exciting actually. And then when you look at capital flows, you know, this is at the end of last year, $20 billion left China to go into American commercial real estate. What's interesting is that that's the top 1% of the top 1% in China. I don't care about them. We care about the 400 million middle-class Chinese that all are on WeChat, that use their mobile phones, and that can legally invest $50,000 into America, England, and Australia. Can you see how this is a whole different way of looking at the world? Whenever technology disrupts an area, it does three things. And just conscious of the time here. The first thing is that it cuts out the middleman. The second thing is that it decreases the costs. And the third thing is that it increases the trust, the transparency, and the accessibility. So again, let's think about Uber. Did it cut out the middleman? Yes or no? Did it decrease the cost? Yes or no? And did it increase your trust, your transparency, and your accessibility? Like, how many of you had a private chauffeur before Uber? Do you see my logic? It's the same in every single industry. So what's fascinating is that Roger asked me to speak a bit about exponential organizations, and we spoke quite a lot about on Saturday about funding. But if you're going to build a platform, you go through this, what they call the J-curve. And it's basically called, the J-curve's the nice language. This here can be called the valley of death. It can also be called the valley of pain. I don't care what you want to call it, but in the old world, you would build a linear business, and the moment you had some money, you would hire more people, and you'd get resources, and your graph would look quite linear. If you're building an exponential technology company, and if you're building specifically a platform, you have to invest in the platform, and ultimately your costs are more than your revenue. Now, if you think I've gone completely mad, my board still thinks I'm mad, but this is fact. Like, you need to get peace with the fact that you have to go this way. And if you don't go this way, you will fail. Because there's no way to go slowly and win globally. Does it make sense? So when you look at the real estate industry, where tech has come along, I mean, you've all heard of Airbnb. I don't know if you've heard of Zoopla out of the UK, Auction.com out of America. All of them within a 2 to 7 year phase literally went to billion-dollar companies as the technology completely disrupted the market. What happened in crowdfunding was quite interesting. In 2014, they changed the laws in America. This was the very first company, Realty Mogul, to get investment of $9 million. This was the second one. Fundrise got $31 million in investment. What was fascinating is that about 8 months ago, they did their own IPO. So initial public offering, like Roger spoke of. They went to their community, and does anyone know how much money they raised? So sorry, just quickly before they do, they kind of said, look, the problem is that most of us only get to benefit in an IPO once it's Amazon or Facebook. We all know we could have made a lot of money in Uber or Airbnb. You don't really want to be in a complete startup no one's ever heard of. So why not get involved in a, in a high growth company at an early stage? And they raised $93 million in 2 days. See how the world's changing. This is a UK company. You can invest £50 in UK property. They raised $27 million. And that's really how they make money from $50. This is a Singaporean company that registered on the ASX, which is the Australian Stock Exchange. And what was interesting is they were valued at 50 million US when they registered, and their revenue was about 1.75. And what was interesting for us is that we looked at this and we said, I spoke a little bit about this on Saturday. I read a book in 2014 by Mark Benioff called Behind the Cloud. So Salesforce, Suraj was the one talking about it. If you go back to the CRM, it's the one that he highly recommends, and we're on Salesforce as well. And what's interesting is that Mark Benioff went to all his VCs and they literally said, there's no way CRM will ever go in the cloud. It's never going to happen. So he said, okay, no problem, I'll go to all my investors and they can invest with me, and then they can help me build a world-class product, and they've vested interest in winning. And today, Salesforce is worth $44 billion and the 14th biggest technology company on the planet. So we formed our wealth partners, and it was interesting. I designed this back in 2015. If any of you have read Exponential Organizations, you would know that the honeycomb is the most resilient structure in nature. So we've built our entire business on nature's principles. Like, I don't believe in rules, much to my mother and my wife's concern. But the same people that made the rules said the world was flat. They said we couldn't fly. They said we couldn't go to the moon. They said that women can't vote. They said that Africans can't vote. So who says the rules are right? But nature's laws, on the other hand, never change. So, a bird flying in a flock can fly 70% further than a bird flying on its own. Yet when we invest as individuals, we want to do it on our own. Interesting, eh? So with our wealth partner concept, we really built a honeycomb, and what we formed was empowered people who want to co-create a better world. And so whether they're interested in the real estate, the technology, the investment space, the vision and the mission, the exponential technologies, or just general business, there's different places for people to participate. What I'm so proud of is that we've now got 120 people from all over the world that have invested in this community. And what I thought to start off with was that they would only get value out of really whether they made money or not. I mean, it's basically an investment, does it go up or down? But actually the true value in the room, and Voldy and others are in the room at the moment, the true value that I get out of it, and I'm sure they do, is actually being in a like-minded community, very much like this one. Does that make sense? So that's been one of the biggest flukes of my business career. I'll be honest with you. Like, we didn't plan it. Sometimes things just happen for a reason. I would highly recommend it though for all of you. So I tend to challenge this assumption with Fundrise, because Fundrise only help Americans in America invest in American property. Now, is that very similar to Uber or Airbnb that are in like 70 plus countries? It's not really, is it? So Wealth Migrate is in 107 countries, so I think that's the wrong way around. I think that Wealth Migrate should be there. If you look at crowdfunding, there's a great company called Crowdcube. I spoke on stage at South by Southwest in Austin this year in March. They've now raised 50 companies have raised more than £1 million, and they raised £1 million in 98 seconds. There's a company here, a guy called Visa Kabaka, that's just started Africa.rise. So go check them out if you want to do equity crowdfunding in this country, in terms of where things are going. But that's where it starts to get exciting with the ICOs. So ICO stands for Initial Coin Offering, and what's fascinating is that it's going to disrupt venture capitalists completely. More money has been raised in ICOs the first 6 months of this year than in all venture capital in America. By the end of this year, it'll be $10 billion that's being raised through ICOs. I don't know if you're aware of this, but if you had put 10,000 euros into every single ICO this year, 90% of them are probably going to fail. But if you put your money into the good ones and the bad ones, your return would be 13 times 2x. So do you think you need to know a little bit about ICOs, yes or no? Both on the good side and the bad side. Because if you invest in the crap, you're going to lose money. So if you're interested, we've got a webinar on Wednesday night with Richard, David, and Michael Turpin to talk about what's happening in ICOs around the world. You're all invited. Just go to wealthmigrate.com and you'll get the details. And I highly recommend you need to learn what's happening. And really that brings me to something that I'm probably most excited about at the moment, which is where Bitcoin is something most people have now heard of. Most people, if they haven't invested in Bitcoin, wish they had, but no one knows what the value of Bitcoin actually is. And so we tend to say, well, everything that is good about Bitcoin could be better if it was based on an asset class everyone understands. So whether you're a rice farmer in China, a rickshaw driver in India, a goat herder in Africa, or an investment banker in New York, I guarantee you, you know the value of real estate. Whether you have access to it or not is a separate conversation. So can you see how to get mass adoption worldwide, you need something that people can understand? Yes or no? So, you know, Bitcoin's lovely, but the average person's got absolutely no idea, even how to participate in it. But imagine if all the real estate globally had the benefits of blockchain in a cryptocurrency where we actually held a store of value, and most importantly, it doesn't have the volatility. So for the traders in the room, the bottom of the curve, you love the volatility. For the rest of us, we actually like a little bit of stability. Seriously, mass adoption needs stability. So our coin will not be able to fluctuate wildly because it's based on real estate, and the value of real estate doesn't fluctuate wildly, up or down. Makes sense? So that's what we are launching in the new year. And like I said on Saturday, we're actually in the process of a pre-launch as we speak. I'm off to Japan next week. And we're going to launch on the 15th of December because that's the day that the Bill of Rights came into action in 1791, and we believe it's time for a democracy of wealth. So this is how we truly believe it's going to happen. What's fascinating for me is that if you look around the world, there's a whole bunch of ICOs in the real estate space. This lady, I met her personally, they raised $16 million in the end. She's never left California. So, you know, I do believe that in the ICO space, the fundamentals of business don't change. You know, do you have a business and do you know how to make money? Do you have a team that knows how to execute no matter whether the market goes up or down? And thirdly, do you know how to build supply and demand? And it's all good and well to have a fancy coin, but no one knows about it. Does that make sense? So, you know, these are some of the metrics that I was telling you about earlier, which we are very grateful for in terms of what's happening. And equally, when you look at it, what's more exciting for me is that, and again, Roger and the team deserve a lot of credit for this, is that it's now getting real traction. And you can see we're actually growing by 1.93% per day, or just short of 64% per month over the last 12 months. This is transactions, so that's where people are actually physically investing. And obviously we're kind of halfway through Q4 at the moment. And then, you know, last year we earned $1 million, and this year we're on target for over $2 million. So, you know, what's interesting is that the next thing, there's another book I would highly recommend for all of you called Upstarts. So please do yourself a favor, go and read Upstarts. And it's the true life story of Uber and Airbnb. And what you've got to do is once you've built something that people want, you've got to roll it out around the world, just like Uber did, just like Airbnb did. So you can see here, as we've rolled out to different regions, what's happened is every time we've had a different version of the platform come out, and we've also had a substantial increase in deal flow through the platform. So that's why in the last couple of months, I literally have not been at home, because we've now got a team on the ground in the UK, we've got a team on the ground in the UAE, we've got a team on the ground in America, and we've also got a team on the ground in Australia, basically. And what's exciting for us, and again, this is hopefully a really good lesson for those of you that want to expand your business around the world, is that what I learned from that book is that when Uber went into a country or a city, they had a triangle. So you need to figure out what's your triangle, what are the 3 most important skills you need. For us in our space, the first person was we needed a platform Fintech compliance person. The second person was we needed a supply person, a real estate, someone who understands who the good people are and how to get good deals. And then the third person was demand. Like, you've got to drive demand. Does that make sense? So that's not right for all of you, but in your business, you need to think, what's the triangle that you need? Once you've built a good core base, what's your triangle to expand? Is that fair? So, really in conclusion, I just wanted to say, I've spoken about a lot today, and I know it's a lot of information. And so what I want to do is just kind of finish off with it really simplified. You really have 4 options going forward when it comes to what we do. The first one is that you can start your journey investing in real estate. Whether you want to invest in South Africa, or England, or America, or Australia, it doesn't actually matter anymore. What I love most is you don't have to bet the farmhouse anymore. You can just get started. The thing I like is you can also learn while doing. You know, you don't have to go read a book or anything. You can learn while doing. You know, you can actually experience whether you want to invest in medical or if you want to invest in houses. You can do it now. You can learn while doing. Also for your children, you can now invest if they're under 18. So my son is 5 years old. This year he will not get a fancy toy. Well, that's if I get my way, if my wife gets her way. But anyway, but the point being is it's actually far more valuable for him to start real life investing at 5. You see what I'm talking about? You can invest in the WealthE Coin. So, like I said to you, if you literally go to the website, wealthe.io, we'll keep you up to date. We will be doing a pre-launch on the 15th of December with the main launch next year. You can join our partner program. So that's really very similar to what Michelle stood on stage and spoke about. It's all built through Salesforce. If you're a real estate company or a financial planner or someone where you got clients and you think they would like to invest overseas, we digitally track the entire thing. In the real estate industry, if you give me a client normally, I sell a house to them, I will pay you a referral once, if you like it. Am I right or wrong for the real estate people in the room? But what's interesting, I mean, I know Glenn knows what, and what's interesting is that once is that 90% of the time you end up in court and you won't get paid at all. So for us is that we learn from Roger and Suraj and them, everything's digitally tracked, that client remains your client for life and you get paid every time they invest. And it's completely transparent for you and for the client. So if you're sitting here and you're a client, you know that they're getting paid, but you're fine because it's a small amount of money and it's sustainable. Is that fair? And then lastly for us is what I've spoken about with our wealth partner community. It's not for everybody. It's by invite only. We tend to run it a bit like a golf club. And really from that perspective, that's where people can become shareholders in the company and not only benefit from what's happening in the company, but be part of the global community. And what we actually did before the pre-launch is that we went to our wealth partner community and we said, listen, we don't want you to have to choose between investing as a wealth partner and or getting coins. So we actually made a cap of $3 million, which we're pretty much nearly there now. We're at about 2.5, 2.6, where people actually can invest, they get shares and coins, like they don't have to choose. So if people are interested in that, just chat to me afterwards. I can take people that are interested through the financials, the background, how it all works. I'm not too interested in doing that today. So that's been the growth of the organization over the last couple of years, but I always like to map it against Salesforce. And if you look at where we are, we haven't even got off a runway in 2017. We've been sitting down there in terms of the growth and what is happening. So I want to leave you with a closing thought. This year is my wife and son, and Jonty is 5 years old, and we're playing Global Monopoly. And he's learning at a very young age to own greenhouses and red hotels and earn a passive income is what we call smart investing. His dad, with an incredible team, has turned that childhood dream into a reality and now has invested on 4 different continents with a mixture of residential and commercial properties, diversified across countries, currencies, and asset classes, and sometimes invested as little as $100. It's what we call smart investing. The wealthiest people in the world, most people don't know this, but they've got a thing called a family office. And what a family office does is that it looks at you bespokely, like what are your personal needs for you and your family? It looks across the world for the best opportunities, and it matches the two together, and and it ultimately creates generational wealth. It's what we call smart investing. And our question, when you take wealth dynamics and all the knowledge we've got around people today, our question is, why can we not put smart investing in every single person's pocket? And I truly believe now, with the advent of cryptocurrencies and blockchain technology at large, that we can now turn that reality or that vision into a reality. And so I applaud every one of you that while you're in this room today, if you go back to that gentleman I spoke about from Apple, what you've heard today can never leave your ears or your brain. And you've really got three options. One is that you can ignore it. Two is you can take action. And three is you can do something even better, which is, I believe, it's our responsibility, every single one of us in this room, to not only do something about it ourselves, but actually to let other people know that technology is changing the way we invest, and we fundamentally can solve the greatest challenge on the planet. So I really want to thank you all. If anyone wants, just before we do questions, where the tallest building in Cape Town is being built at the moment, it's called 0 to 1. We're giving away an apartment in that building. It's worth 2.5 million rand. And people say to us, well, why are we doing that? Well, we're giving it away on the 27th of April. Can anyone tell me why that day? It's Freedom Day. Why is it called Freedom Day? Yeah. So we got political freedom on the 27th of April. We believe it's time for democratize wealth and wealth freedom for everyone. So we'll be giving away an apartment. All the people have to do is sign up on the platform. So you literally go to wealthmigrate.com, you sign up, that's all you have to do. My best friend from UCT asked me what's the catch. I already told you the catch on Saturday. All we want people to do is realize that there's a better way than the old one. So if you want to participate in that, and then while we're doing, if people have any questions, I just wanted to put up contact details. This guy, Kevin, is my business partner. He's actually the one I told you about that made the video on Saturday. If you remember, Steve asked the question about how to hire good people. And so if you're interested in the Wealth Partners or you've got any questions, that's his mobile number, that's his email. He's currently in Sydney, but just bang him an email and he can give you the details. And then you've got all our different contact details. Any questions, guys? Anything I haven't answered? Anything I've completely confused you with about anything? Cryptos, blockchain, real estate? The question was, what are the implications of South Africans investing offshore? What do you mean by that? By tax?
No, I'm more concerned about the fact that only a certain amount of investment is allowed offshore.
Yeah.
And if you're up at that level, what are the implications?
Great question. So, so firstly, for everyone in the room, the current level around in South Africa is 10 million rand per year per spouse. So if you've got a husband and wife, and any children under the age of 21, you can take 10 million rand per person as long as your tax affairs are in order. Secondly, the first million is non-discretionary, so it's actually pretty easy. Like you can move up to 1 million rand even without your tax affairs being 100% in order. Like the first million is pretty easy. Whatever, is everyone happy so far? Yep. If you've already moved your offshore allowance, well, just to be fair, it's a calendar year. So if you haven't done it and it's December right now, then you should take action. Because at 31 December, clock gets set again, you're back to next year. Okay? And the beauty is you don't have to worry about going overseas and setting up bank accounts and whatever. You can literally go online, set up, so the only problem that we can't solve right now, which is really where I hope Maya comes in, is that our KYC process is offline and it's manual and it pisses the living shit out of you. Okay? No, I'm serious. It takes like 3 days. It's not acceptable for a platform company. But once you've done that horrible process, everything else is online. Does that make sense? You know? So coming back, in a week you can set it up. You then got your bank accounts. You can send the money and it's done. Okay? If you are 10 million, if you're already at your overseas allowance, obviously that's an annual allowance. 2 of my business partners used FIRB, which is foreign investment, FIRD, it's your foreign investment allowance. You can actually move up to 500 million rand, which that's a separate conversation I can help you with. And thirdly, or fourthly, is that you can use Bitcoin. And that's not something I'm going to talk about publicly on stage. Read between the lines. Any other questions? Yes?
tell me, you've mentioned the, in this case, if it's you're doing it personally, you can use your allowance. What if you are using some other juristic entity other than yourself? How does that work?
So that's a good question. And I mean, I can't even remember. It's your foreign investment. I can't get the acronym right now. So that's really where it comes down to companies, and it does get slightly more complicated. I'm not going to stand on stage and try and sound like a tax expert. I'm not. I've got far more, because Roger actually, I've got far more qualified, intelligent people in our team than me when it comes to tax and structuring. But I do know when you go through a company, it becomes more complicated. A lot of people in this country ask, well, can I invest through my trust? It doesn't make good sense to do that overseas, in terms of investing from your local trust overseas, for lots of reasons, including your tying your assets between the two. So my request to you would be actually that I can put you in contact with Billy, Billy's actually there, standing in the back by the projector, and Billy can basically help you with Michiel and Lo, who Michiel's here in Centurion, Lo's in Cape Town, and they are much more qualified than me to actually help you with specific structure. Okay. And we don't actually do it ourselves, we also work with PKF, it's one of the top 6 accounting firms in the world. Okay. I actually failed to mention that earlier. We never touch the money. It's completely ring-fenced. If we went bankrupt tomorrow morning, you own your asset. So again, in a fund, you give me the money, I go buy the asset, I go bankrupt, you lose your money. We never touch the money. It's all audited and controlled by PKF, a top 6 accounting firm in the world. It's quite important to understand that from a risk perspective. We're a facilitator, we don't hold the money, we don't own the money, we don't invest the money, we just make it happen basically by bringing everyone together. Is there a question? Yeah? Just fire, dude.
So I've got 3 questions. For the limit of time, you can choose which one you want to answer. So firstly, your point that you develop the blockchain yourself, or did you base it on another blockchain? That's one of the stuff just for interest sake. And then you mentioned something about business to other countries, making it easier. So I travel quite a bit and I understand the problems of visas, especially to the US, etc. And then probably my main important question is there a difference because your points value is based on the property portfolio in general? That's what's backing the value of the coin, where the other coins don't have value, so I understand that part. But what's the difference between investing in the coin and investing in a property, in one particular property? Would it be more beneficial to invest in one asset on your platform, or to invest in the coin that's based on the total portfolio?
Cool. So they're all 3 good questions. Look guys, if you don't want to stay for questions, because it's lunchtime now and we've got 1 o'clock, I've got no disrespect if you want to leave. I'd rather just answer questions if they're valid. I think all 3 questions were good. So please, if you're bored and you hate me and you don't like what we're doing, go at lunch. I'm serious, I don't care. So just in terms of your first question, in terms of the blockchain, we actually built it on open source and very much on the Bitcoin protocol. At the moment, you saw we're using Block Cipher. We are building the second version on ECR20, basically, or ERC20, which is the Ethereum backbone. I can actually take you through the whole structure. We've got 6 levels of the blockchain we want to build out. We've only built layer 1.
But it's the conference you were saying on Wednesday.
Correct. We'll go into much more detail. And my business partner was actually here, Jakob Moritz, and again, he's far more intelligent in that space. In terms of where we're going. So that was your first question. Your second question was on visas and passports. So when I wrote that book, chapter 10, and you can all get access, I'll send you a copy of the book, it's an ebook, you can read it for free. Chapter 10, I looked at 16 different countries. There's not one country on this planet that gives you the ability to buy a house and get a passport that's a good investment. I want to be very clear there, okay? Like I live in Knysna, I have a boat outside my house. The boat, every morning I wake up and I go, this is a good asset, this is a good asset. But no matter how many times I say that, it's not a good asset. I bought the boat for fun, let's be frank. Okay, so if you buy a passport in a country to buy a passport, then be clear with yourself, you're buying a passport, but don't kid yourself it's a good investment. Is that fair? And I'm not saying it's a bad thing, I just want people to be aware of what they're doing. The third thing is there are some opportunities, like in America you can do an EB5, it's $500,000. You get a green card, you can do it. Now that's interesting because that actually is a good investment, and you do get a decent return with it, and you get a passport. And Hilda was on stage yesterday. She's done that, and she's off to America. through that process. So that's what we mean by, for sophisticated investors, there are ways to do it. There's a way to get into Australia, and we know people, we don't do it ourselves, but we know there are people to help people with that. And then the fourth thing that I actually think is even more important is that I believe it's more important to become a global citizen, both in your mindset and for your children. Because honestly, guys, if you've got a skill set and you've got value and you've got first world assets paying your first world income, you have the flexibility to live anywhere you want in the world. I know you think you might be trapped in South Africa, you're not. Like when you own first world assets with a first world income, you can literally pick your life up and you can move somewhere else. If you own, we've got businesses ourselves, Australia and America, your businesses can employ you. So there's ways to do it, like, you know, in terms of, but I honestly believe it's about having a global mindset first and foremost. And that can start with $1,000. You don't need $500,000 to get started. Does that make sense? And your third question was, just remind me again quickly. Oh, the coin, yeah. Sorry. So what's really important, okay, and I can talk about, is the ICO thing interesting to people? Like, do you want me to talk a bit more about it? Okay. So what's really interesting is that I've been on an absolute crash course in the last 6 months. And I've always believed in life, like if you want to get wealthy, hang around wealthy people. If you want to get successful, partner with the best in the world. So don't go try to find the best in South Africa, go find the best in the world. So we were lucky enough to find some of the best in the world, and they were quite excited about us because we were a marketplace platform company that was already built on blockchain. We didn't do it, we didn't build it on blockchain because we wanted to do an ICO. We built it on blockchain for 2 reasons. One was to solve trust, which I've already shown you, and secondly was to reduce the friction costs so that we could get it down to $1 per investment. Then what happened was we've already done our funding strategy, quite frankly, with what you would call off-market crowdfunding. And when we heard about the ICO space, this is like, we were just like, wow, this is incredible. Like, so we went to some of the best in the world. What's happened over the last 6 months is the regulation's been changing so fast all around the world. So there's 2 types of coins. You've got a utility coin and you've got a security coin. So a utility coin is think of it like discovery vitality points. You know, like it's all about engagement and using it. So there's a test, again, I don't know how much detail you want me to go into. There's a test in America called the Howey test. And that ultimately determines around the world whether it's a security or not. And there's 4 different levels to the Howey's test, but the most important thing is, under the Howey's test, it's a security if someone invests and can sit on their butts and do nothing and expect a return. It's basically passive investing. If someone has to actively be engaged, then they're not passive, can you see? And then it's utility. You're with me so far, I haven't lost you yet. So our strategy was always to work on a 20-80 principle. 20% of our coin was always going to be based on a utility. Badges, engagement, ecosystems, getting the community to be participating. Like a lot of people when they think of due diligence, think that you're going to have all these grey-haired people sitting in a room with an investment committee making a decision. Which is better, the Britannica Encyclopedia or Wikipedia? Wikipedia. You've got to admit it is. It's more up to date and it's more accurate. So why do we think that an investment committee running a property fund or REIT can make a better decision about a good investment versus a crowd? You see where I'm going with this? Okay, so no disrespect to any middle level bankers, but most middle level bankers hate their job, and no one really they feel disrespected or whatever. Like if they could go home at night and actually like do due diligence and win badges and get significance, like do you agree that that will actually be and get paid for their time? Do you think? Can you see a future where this is going to change? Okay, so then that would all be engaged and they would be paid in coin, in WealthE Coin. So that's all the 20%. Okay. Then 80% of our coin is going to be a store of wealth, which is based on the real estate. And that's just black or white, it's real estate, yes or no. But now let's be frank, what I told you about the Howey test, that's a security 100%. Can you see it? It's a security. You sit on your butt and you get paid, it's a security. So what's interesting, if you're thinking about doing a coin, right now there are no exchanges in the world that allow you to have a security coin. And a coin and a token is the same thing, so don't worry about the difference. So if you launch a security token right now, you will have no liquidity. So if you invest, you can't go to an exchange, there's nowhere to buy or sell it. So what we decided as a strategy is that we were always going to work on the 2080. It's about 12 months away from the exchanges allowing security tokens. So what we're going to do is we're going to work, our strategy is a 2080 principle, where we're going to launch the WealthE Coin. The first 20% will be based on the utility, and 12 months from now, plus minus once the exchanges open up, we'll bring the security component to it. Do you understand the logic? Because it's to everyone's benefit, because it actually unlocks the system. So if you're thinking of doing an ICO token coin, I would highly recommend what I've just said there, because it's not what we're doing. You have to do it because of regulation, basically, around the world, including the FSP and every other jurisdiction. Is that fair? Cool. Let's do one more question, because I know people need to go get lunch. Okay, two more. Last two questions, and then we're done. Yeah. Sorry, just quickly. Did that answer your question? Yeah. Cool. Yeah, so I think the question is there flexibility? So please understand, guys, we're not a property fund or a REIT. So if I pay Old Mutual, I pay them R1,000 a month, and I just pay them every month. They take my money and they then go and invest it in assets. Would you agree? Is that right? Okay, we're not that, because you're not giving me the money. So when a building, like one of those ones I showed you, when it's full, it's full, it's closed, it's done. There's no way to get. So the thing is that you can have the financial discipline, and we're building the tech at the moment so we can actually create debit orders. But that debit order won't go straight into a property, it'll go into your account. And then with your account, you can decide what you want to do with it. Does that make sense, you know? So with the WealthE Coin, once it launches, it'll be on the exchange, and you'll be able to trade it either on the exchange and or on our platform. But they'll be effectively, fundamentally, two different things. Do you know what I mean? And then it'll be really your choice as to what you want to do with it. Does that answer your question? Yeah, so you get to choose, basically. I think it's the most important lesson I want to try and get across today, is that the world has fundamentally shifted from people wanting someone else to make decisions to us actually taking control of our destiny. But with that comes our own accountability as well. Like, you know, if you invest in e-resorts and e-resorts goes down, you can't come and scream at me or Roger. It was your decision to invest. Do you know what I mean? Because there's no middleman telling you it was a good idea. And I'm not saying it's a bad, like any project has risk, let's be frank. Does that make sense? There was one more at the back there, yeah?
Hello, sorry. So you mentioned we buy a property for capital appreciation and not for passive income. So is this a passive income model and you get monthly returns, or is it also a capital appreciation model?
That's a great question. So the answer is that it's actually both. But you're investing primarily for the cash on cash return. So you're getting paid your quarterly dividends. So what I mean by a dividend is every month, every quarter the tenants pay a rent, and we split up the rent and it gets paid to you. It's literally like how it works. But you also get the capital growth. You own the building. So when we exited in 5 years, so I told some people outside this, every time you buy an asset, you have to have an exit strategy. So one of our strategies here is that, you know, and that Henny came up with, we buy buildings where the amount of equity required is $1 million, more than $1 million, less than $10 million. And the reason being is that more than $1 million is too much for the small guy, and below $10 million is too small for the big guy. You see the logic? And again, I don't have time today, but if you look at the value chain of real estate, the way people make money in property is by selling to a fund or a REIT. That's how you make money. And so we've got now over 30 buildings in America. We've built up a portfolio of over $100 million. We've already got an offer on the table for all the buildings that you just saw, plus a couple of others. And guess what? It's from a fund or a REIT. And they're buying it at a cap rate of like 5.5. We've been buying these buildings at an 8% cap rate. So what we've got is a real problem right now. Because all of us investors, including me, we're only 3 years into a 5-year investment. We're getting paid 8 to 11%, which we really quite enjoy. But we're all sellers at the right price. It's a nice problem to have. But it comes back to your conversation. Like, so there's always an exit, you know, for people to build, and then you get the capital growth as well.
Sorry, just one last question. So,
and then,
when does we eventually be?
Sorry, do people
then? So what stops us from eventually overinflating the property above the value of the property and becoming like a stock or overvalued stock? Basically what's happening to Bitcoin now, where there's more value in it than where there's actually intrinsic value.
Oh, so you're asking the question, I think, on twofold. One is on the secondary market, where people are willing to pay more for the shares than the value. We're trying to figure that out. Remember I said it's in beta testing. because we want to keep the best parts of direct property and not get into that. Like, so people invest in a fund or a REIT, most of you don't know it's got more than a 70% correlation with the stock market. So you think you're investing in real estate, you're not. It's got a higher than 70% correlation to the stock market. So that's the first thing. The second thing is we're asking on the coin side, I presume, and also where the coin price goes up relative to the asset. And I don't have the answers for that either, because we're working on it. So what we do believe is that, I suppose it's like investing in Amazon right now. You know, if you take the average PE ratio, then you would say the value is this, but people are willing to invest at that. And I think what we're probably going to do is you don't want to manipulate the market, because you're not a market maker. But what is important is that people must always know what the intrinsic value of the real estate is. So let's say the coin is worth $1 and the real estate value is only worth 40 cents. They get in knowing that their worst case scenario is 40 cents. That's our gut feel. That's a work in progress. Cool. We need to wrap up, guys. I'm getting into lots of trouble here. So if you want my details, are also at the bottom there. You've got my mobile number and my email. I'll just stay at the front here if people want to ask questions. But I actually know that you want to get us out of the room, man.
Yes, and if everyone can come back by 1.
Yeah. No, we have said. So 1 o'clock. And lunch is not provided today.